Welcome back to my YouTube viewers and of course those subscribers. Now this week's video is going to be slightly different. I want to go through to share with you the actual process I use when I'm looking to take any trades in the market. And I'm going to do this on one time frame only. You're going to see my actual process that I use day in, day out. And I'm going to do this on a 1 minute time frame. I want to go through first to the community tab inside the YouTube channel so you can see what those questions were I was asking. So on that community tab now the first question I asked was actually, what do you prefer to trade? Now, majority of you have said 75% is Forex, and that actually was quite interesting to me because I know a lot of you like to trade the cryptocurrencies. So 75% decided to say they liked to trade Forex. We then looked at what was your favorite pair to trade. And again, the majority of you have said the Euro USD pair. There was a 20% on the gold, but still 42% decided on the Euro USD pair. Then I also asked what was your time frame you preferred to trade, and a massive 45% of you did say the 15 minute and lower, but we do have a 31% of the 4 hour. But whatever I share in this video, you're going to be able to apply this to the 4 hour time frame as well. Let's go back to those charts. So what I'm going to do now, I'm going to go through the whole process of exactly what I'll be looking for from start to finish to be looking for a trade right now. Now, the first thing that we're going to look at is our trading range. So looking at this, let's go back and we can see where the market's been going. We've been going upwards. We can identify early on here, we have a push up, pull back. Let me just grab my drawing tool. So we have a push up here. We have a break of structure, this lower high and this low here, this lower high here. We have a pullback. We have another break of structure once again, pull back, and a break of structure. So our overall trend is bullish. At the moment on this time frame, forget everything else, this time frame has been bullish. We've now made this pullback and we've made a higher low. So we're still bullish in this market until we remove this low here, which is then going to create a reversal in the trend. Now we've seen a move back up. So what do we do at this stage? The first thing we need to identify is where is our current trading range. So if we know this is our last push up, this is our current trading range. So the first thing we have to identify now is we're going to mark off this low. I'm going to mark off the high. So this is our current trading range. Now, there was a previous video I did which shared with you what we do when we're looking for that discount premium area to take a trade. Now, the simple way is to use the Fibonacci tool, but I will leave that video at the end of this video for you to understand how we look at using this tool to identify the best possible areas to take a trade. Basically, what we're looking for is any trades in this lower area. Now you can see price now actually comes into this lower area, but it does not mean we're basically going to be searching for a trade and expecting price just to head higher. Just because we see that this pair is in that uptrend, it does not assume straight away we're going to be going bullish again. Remember, at some point the trend will reverse. And at this point of the market is where you're going to have a losing trade. You're just not going to get away from that. I take losing trades all the time. But it's understanding once that market shifts, you take that losing trade, you then have to start looking for the direction again, which way the market's going. So this is my current trading range we're in. So until price from here breaks through this low, we're then back on a bearish bias. We could still see from here price heading up, grab my arrow, and breaking this high here to the left with a continuation. So once you understand your trading range you're in, the direction we're looking to go is bullish until this low is removed, you now know what you're looking to trade inside this range. Now, once we understand this, now we can go away, get rid of all this price action, look at this current trading range and decide where could price come back to. Well, we now have areas of demand. We have an area of demand here from the low. I'm not going to draw them all out, but I'm going to show you where our main demand zone is. We have a push up. We have another demand zone here, a rally-based rally. We then have another demand zone here, which is a tested zone. We rally away. We have another demand zone again. And then finally, you can see the market has a break of structure. So we have this area here where we do have a break of structure to the downside at this point. Now this is our largest swing. This is our main swing to the downside, and this is our largest swing to the upside. But that is our larger trading range. Inside this move up, this is where many traders find it difficult to understand, is we have different trading ranges inside this move. So you can see where we have a pullback each time here creates our new trading range. And also it's a trend inside a trend. Now that all comes into understanding multiple time frame analysis. So this move up is more likely to be around about a 5 or 15 minute trend, which is a single swing. But now we have the 1 minute swings inside that higher time frame. And eventually we break through, move across, we break through this area, breaking market structure. Then we have a new lower high and we have our new ranging to downside. So we can see we start to have a trend to the downside. We can identify these areas of demand have been removed. And again, this one here was removed as well. And we can drag this one across, was removed. This is our only demand zone which remains. We did not come back into that demand zone yet. We also have areas here of imbalance. We need to understand where everything is laid out. Now this imbalance was removed on this candle. So now we don't have this imbalance. So the knowledge you have is that once we remove these lows, okay, this minor trend inside this range is now bearish. Okay, so once we remove this area, we're now bearish. We go down to the next low, we bounce up, we continue bearish. It's not until we see the reversal, okay, and we have this minor area here where you see that break up and we have a pullback. Now that pullback's going back up to find somewhere for an area of liquidity to perhaps go lower. Now the reason I'm looking at price to go lower is because we're breaking these smaller trends to downside, creating a new movement to downside. But we're waiting to see how price reacts now at this demand zone. Okay, so this is live price action right now. I haven't just come to this chart to show you this. I'm showing you this in live conditions. So now we understand this is my trading range. Price has broken all these lows. We're not interested in these areas of demand now. Now there's ways we can look for trades out of these zones. But once we see this break of structure here, we have a bearish bias on this 1 minute trend. Again, we have a break of structure. Okay, to downside. This puts us in a bearish bias within this range. We have another break of structure here. And there's videos in the channel that goes through the difference between a break of structure and a change of character. I will leave a link above now for that video. It's a great video to understand the difference between the two. Again, another break of structure to downside here. And eventually, this is one move for me. This creates a high. And at this point, the market did not break this high, only with a wick on that candle, but it's still a valid break to the upside. But it's more of what we call a manipulation in the market. And then we see the fall back down now to take this low and this low in one move into this area of demand. This is our origin of this swing to the upside on this 1 minute time frame. Now, I'm also going to identify in here is an area of imbalance. Now, this area of imbalance, it's a very small area, but it's an area left over. This got filled on this first test. That's why we see the bounce up from here. There are orders sitting within this area of imbalance, hidden block of orders left behind. The market's come in, we've seen that bounce away. We haven't yet taken this high fully, closed it, but we did wick through it. So at this point, what do we look for? Now we are still bullish on the long-term trend from this range, this trading range. So our last point now is at this area, we're looking for any potential buy trades out or to see if this area will hold. If we close through this area, this previous low, then your trend continues bearish. It's as simple as that. Right now, how will we be looking for any trades? We have here a potential area for manipulation. If this level holds, we can see this is a manipulation into this area of demand and a reversal. I want to see this area here left over of imbalance inside this bearish candle. I need to see this imbalance removed. Now, what I mean by this, we need to see a bullish close up. If we get bullish close up, then we can look for an entry. Stop has to go below this area of demand down here. We have some areas we can take target on the way up. This will be a first potential target of this area. We mark this off quickly. So there's a first potential target. Now your stop could either be below this zone protection or the previous low where we see the reversal coming out. We haven't yet closed that area of imbalance. Look at how price spiked through and did not close it. But we go closer into price now. Reading this candle by candle, we have basically filled the gap here on this push up. Okay, we took the low of this candle first, pushed up to fill that gap. A close through this level will indicate a potential reversal, and price will want to go up to take this high and potentially fill this gap. That's what we're looking to happen next. Then we're looking for the next area to be filled and then continuation to take the highs. This is what we'll be looking for. So the market will be looking for price to take these highs if price is continue higher from here. At the moment, we have no reason to take a buy. We could still see a drop through to remove this demand and we continuation to downside. Basically, what we're looking at is we have these areas here of imbalances where we can still look to sell from. Okay, unless price identifies again here, this area of imbalance is still a potential area we could look to sell through from. Let's remove this level. So let's take this away for a moment. This is how I'm looking at the charts right now. Potentially, if this area of imbalance holds, which it is at the moment, and we see a continuation now from here, we could break this low. See how I haven't just jumped into this trade. I haven't just gone, think, I'm going to buy off this area of demand. It's the origin of the move. We're going to go higher from here. Continue with this trend. Remember, the overall trend has been bullish, but we don't just jump into the market. And this is exactly what you'll learn inside that Forex Masterclass course, how to read the charts like this. Now look what's just happened. Did you see how that was one big bearish candle at the moment? And what it's done is gone back to remove these lows in the market. We've wicked and closed back up. If we now see it close down, removing these lows with a nice big bearish candle, we're going to take this area of demand. If we see it close above this area of imbalance, we're going to head up to this area. Let's just watch price action now and see what happens. It's right here is basically we're taking the low again. We've taken the low of this candle. It's going closer. Like I said, we close those lows. We're going to continue to fall. So we just now spiked the low, took the low. If we now close back up as a bullish candle, that is a signal to go long. If we do not, and we close down below this level I've just drawn, then that's a signal that we're going to break this demand or to remove this demand zone and continue lower. Now this is something that I've never done before, never gone through with live market conditions to show you how to look at trading the market. I do hope that you're getting some good value from this. If you are, don't forget to give me that thumbs up on this video and leave a comment if you've enjoyed this video today. So now we've actually closed up on this wick. We did close down still, but a valid close up, taking this area now of imbalance is a signal to go long. We did wick this low. It shows me it's a manipulation, okay, to the downside, and we close back up. A nice close here will indicate to me we can look at going long in this market. Okay, we can put a stop below this manipulation, and we first target we're looking to probably fill this imbalance. And then we can look at the market to go higher. But let's first just see what happened on this candle. Okay, we've got just to wait for this candle to close. Potential target is going to be to take these highs. First target, and that's what I'm looking at in my mind. If I'm watching and I'm trading this, I'm looking for this to be filled first. So I've gone long now this position. That's where we're looking to go higher for this high. Okay, so I'm looking for the market to want to continue up now.
Just waiting for this candle to close.
Now we could see the low of this candle being taken, this bullish candle, then we could see a follow through back to the upside. Like I said, this video, I didn't know how long it's going to be. It could have been a 5-minute video, could be a 50-minute video. I'm just going to watch and see what price does here. Now imagine if this is a 4-hour candle. You do the exact same process, but you just come back every 4 hours to check the chart. But there's much more to it than just reading the candles like this on the chart. We've got to do our top-down analysis. Understanding where we are in higher time frames is crucial. So what we've actually done now, we've actually closed back down. Now for me, that is a signal that we've pulled back into a potential lower area here of demand on a lower time frame. So we did have a break of structure at this area on a lower time frame. Now if we break this low, where we'll be looking to take this buy, then we're going to take and remove it. And this has been a manipulation back up into this small area of imbalance left over. So you can't see it, it's very small, just here. It's still level, very small now, but it's still level there. Well, this could be, it's just a break of structure, pull back into a smaller time frame of demand, or to fill an imbalance on lower, like a 30-second, 5-second chart, whatever it is you can go down to. And then we could see a push up again. We'll have to wait and see what happens here. Now if it closes down, takes the low, we're going to remove this area here of demand, and it's a loss. Okay, so this is where we're looking for that reversal out of this area. When this is the point where I was saying earlier on, at some point you've got to take a loss. You've got to lose on the trend reversal, and that is unfortunately looks like it's what's about to happen. So this is actually good that this has happened in real time. So you can see where I potentially would have taken a loss. So this is the low. We've just gone through that low. Again, we want to see the market closing through this low to continue to go lower. Could be just another manipulation to go back up. Hasn't quite hit that stop yet. Always have your stop below the low for a few pips. And again, this could just be another wick in to this area of demand. And the demand zone is just about there. Hopefully this video doesn't go on too much longer. And again, like I said, this can all be taught to you inside the masterclass course. Obviously, I don't look at trading the 1 minute time frame. I'm looking at more the higher time frames from the 4 hour down to 30 minute, 5 minute. 1 minute for me is too choppy. Okay, I don't have the time to sit there and watch the charts like we're doing now. Obviously, this video is for your education to show you how we're reading these markets. Just wait and see where we get this move up. Now, obviously, just like to say, this is not a live trade. I'm just showing you this on Trading Review just to show you this is basically how I'll be looking at trade the markets. I haven't actually entered this trade, just to show you how I'll be reading the candles on the chart. This is understanding supply and demand and smart money concepts. This area of demand, remember this area of imbalance was very, very small. And we didn't really see it very clearly there until we zoom in. But it's still an area where we see the markets reacted off and we've dropped back down. Now this has actually gone into manipulation again at these lows. We just move this area of demand over. So we just took the low. Now our stop was below there. To allow for this, because what we have to allow for is that manipulation in the market. Just took the lows and we've pushed back up. Let's drag this across. So now we could see the continuation. Now we could see a close of this level here. If we get a close of this imbalance, it's already been filled. A close above this area is going to indicate that price will go to this area of imbalance and this previous high. And again, if we see a continuation for this move up in 1 minute, we're looking for this high to be removed. So we continue to go up. Hopefully we can close above this area of imbalance. We see a nice push up now. It's a nice expansive move up, showing us the continuation of price. Okay, so we can remove this level now. We can see that price is heading up. It's now gone into this above this high. Okay, so we just wicked above that high as expected. Now you could potentially look at taking some profits there just above that high, or you could look for this area to be filled. But remember, we can still see a reaction off this area of imbalance. But on the way up, we now start to notice that we have an area of imbalance left over. The market may want to pull back into this imbalance to then push back up to remove this one. So we're currently now, 21 minutes into this video. It's been a long video. Again, like I said, if you're enjoying this video so far, what we're doing in today's video, leave a thumbs up. Let me know if it's something perhaps we could do again in the future. Perhaps we could even look at doing a live event like this. But as you can see, the market here has pulled back. It's left this gap still. So if we close this current candle, we now have another area of imbalance. And all of this is taught in much more detail inside that masterclass course. How I actually look for my imbalances, where I'm expecting price to go, and also understand the order flow in the market. Now there is videos all in this channel, go through everything that we're discussing so far in this video, understanding that range where we're looking at the break structure, the supply and demand zones, the imbalances, there's an imbalance trading strategy in this channel. Everything is inside the channel for you to learn how to apply these concepts. But there's a lot more that I do not share in the YouTube channel inside the masterclass course. So let's see what happens here. Let's see if we pop back in below this low and then we push back up. So again, as I said, we're expecting price to react here just above this high into this imbalance. Let me just have a quick drink. And we're just holding above this area of imbalance. And just to say, this isn't financial advice. Okay, I'm not actually telling you this is exactly how you should be trading. I'm just giving you some education, something that perhaps I've not actually seen other channels do to show you the education of how they trade. They basically would go through previous price action. So I want to go through live current price action as we see it happening in real time. Something that many educators don't like to do. Many educators, should I say, don't trade live themselves. That's perhaps what I'm more getting at. I'm just trying to show this is how I be trading. Okay, so we can see we're just now closing through this imbalance. That's great. So what do we now have? We still have these imbalances left below. We get another push up. We're going to have another new area of imbalance, but we could see a pullback first to fill this area, be created on this candle, and we can see another push higher. So looking at to the left, we do have a new area here of imbalance. Okay, so we can draw that out. This one has now been removed, so we can remove it. And one thing I'd like to show you is a candle, an expansive candle like this, a nice momentum move up will tend to remove a previous area. That's what we just seen. So we can remove that level as well. So now we're at the next area of imbalance. We want to see a close through this one, and that's going to show me the market's going to go to this area. So we just mark this out before we get there. So we close this imbalance, or even if we close as we are now, we're going to leave another new area. Look at the way the candles are changing. Look how we had a bearish candle, bearish, 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 a nice expansive move down. Then we have indecision. Indecision is just showing you that the accumulation from those banks. Okay. We then have a manipulation, another manipulation, expansive move up, indecision, some more accumulation, another expansive move up, another indecision candle. Now we want to see another push through to show us that the market will continue higher. If we push and close through this level, I'm expecting price to go up to here. Then the previous highs and this high. And if we continue to break this high, that is going to show you the market may want to go up to the previous high, continuation in this trend. Now I'm not going to sit here going through all that because this video will go on for a lifetime. But this hopefully is giving you great insight on what you can achieve once you go through that Forex Masterclass course and through everything you'll learn inside the private community. The private community is where you're going to start to learn more concepts, where I have more extra education. So hopefully this is showing you the way that I trade using supply and demand smart money. Now on the way up, not just those imbalances, we have areas of demand as well. So we have a rally-based rally demand zone. We've now created this push up. Now for me, this small candle indecision, I do not like it as a demand zone. I prefer this as a demand zone. So we could have a pullback here at some point for an entry long. Now this is what's just happened. we've removed that area. Okay, so we'll continue to be bullish, and we now create a new area of imbalance left behind. So we have area of demand, imbalance, imbalance, area of demand. Now the market, if we continue up, this is our next area we're looking for price to go to. Let's just see if we can get to this area, and then I'll perhaps look at finishing this video. You can see what's happening. We're having that reaction. Okay, so you can see we went down, we filled this imbalance, we tagged into this area of demand right here. Now we still have this area of demand below, and we still have these areas of imbalance below. At some point the market will want to come back to those areas. Doesn't have to happen straight away. It could be a long time away. But what you need to understand, at some point the market will come back to these levels. So now we should see another continuation up here. We've filled this imbalance. We've taken the low of the previous candle. We've come back into this demand. We want to see a bullish move up here now. And the reason I want to see a bullish move up is because we just left this area of imbalance. The market's now come back into. We need to see that imbalance close through to see a continuation higher. Now we're trapped between two areas. This imbalance is still holding till we close it. Then we could see a continuation to the next area. And again, we did break structure here to downside. So on understanding a range, okay, this is a current trading range on a lower trading range. So from here to this low is a current trading range. This could still be a pullback against that trading range. We could see a continuation down to remove this area here of demand. This area from back here. Just understand that, and you basically trade what you see at the time. Right now, what I'm seeing is a reversal back to downside at the moment. So we now, if we close this area of imbalance, we remove it, we could see continuation down. And if we remove this area of demand as well, let's move this across. So now we're closing through. So you can see there, the market's come back up. We've made a reversal inside this trading range. Now, where do we normally look for this? We're looking for that trading range to happen above our 50% area. And again, that video's come to the end of this video for you to watch to understand. We went above that area into our premium area to look for a sell. The market has now come down. We've closed. Let's remove this quickly. We've closed. We come back into this area of imbalance. We've now closed this imbalance, so we can remove this. We've now come into this area of demand. We've wicked it, so we can remove that demand zone. And we now dropped in to fill this imbalance. And we've come into the larger area of demand. This is where we had another break of structure here. So yes, this is our trading range. We had another break of structure, leaving this area of imbalance, which we now got filled. And we've come into this area of demand. So again, we're still waiting to see if this area of imbalance is now closed through, then this is showing me a continuation to downside. If this area of imbalance now holds, and this demand zone holds, which is a fresh area of demand. Now again, you'll learn more about the fresh and tested zones in this channel, or even inside that advanced course or the masterclass course. Now what I want to see is a push up here to now remove our new area of imbalance and see what happens. And then we're going to look at finishing this video. It's gone on for nearly 32 minutes. So if we close this area of imbalance, then I would say we're going to be going for the next area and removing these lows and this area of demand. But if we get another push back up, this is now going to be a higher low. At the moment, we're still bullish because we've broken this high. And this is our current trading range. We've now broken this high, made a higher low, pushed up, momentum moves the upside. But now you can see the way the market's shifting. We're having a expansive move down, pullback, expansive move down, indecision. We need to see another expansive move upside to see a continuation. If we're marking off this current trading range, we can see we're pulled back below the 50% into our area of imbalance and our area of demand. Remember, this became our area of demand once we see the break of this structure with this momentum move up. Let's remove that level now. And if we now see a close back above this area of imbalance, that's going to indicate a continuation up to this level. So at the moment, you can see we're wicked through, price is holding. We have to see that area being removed. Otherwise, what it's going to look at is we're looking at like a manipulation in the market. On the lower area, you're going to see a potential manipulation of this high of this candle. Now, there is a video in the channel that goes through the manipulation. I'll leave that linked above now as well. So we'll just close and remove this area. Looks like to me we've got a new expansive move up. We're going to continue higher. We're going to go back into this area as well. Hopefully take the high of this previous bearish candle and remove and close this area of imbalance. Then we're going up to this level. That's showing that we had that nice retracement. We come back into this area of imbalance. We're showing a potential reversal. So this area here shows me that we had a push down, a push back up. It shows me the reversals just appeared at this area of demand. Now the market has just come into this area of imbalance again. We had a reaction. So as you can see, the market has a lot of reaction at this area. And we've closed down to fill this area left over on this bullish candle. Now we just need to see another nice bullish move up, a nice expansive move, taking the high, these two highs. So what does that leave behind? Our area of imbalance is now here in the market. That's what's left over. Did this candle go into that area of imbalance? No, it did not. It didn't fill any more imbalance. So we still want to see that push up to fill the final area of that imbalance. Yes, we could then look for a sell back down on a smaller time frame, but on this time frame, we want to see it close through this level, then it'll take this high, and then we go back to this level. Now, I know I've asked this already in this video a few times, but if you are enjoying this video today, I know it's gone on for quite a while, don't forget to give me a thumbs up and leave a comment below if there's any questions you have, or if you want to understand more on joining that Forex Masterclass course. So again, we're still just stationary. We haven't gone up or down here at the moment. We're just perhaps going to fill this area of imbalance. So at the moment, we're just really still sitting here. I was hoping this video wasn't going to go on this long. It's now 40 minutes. Let's just see if we do get a final push up in the next few minutes. We are coming close now to the opening of the US session in the next hour or so. So it could be where price is going to start to slow down before the opening of the new session. Let's just recap what we're actually looking at the moment on the chart. So we can see that the market came down. We recognized here that we had this final push down. We had some indecision. We had some manipulations. This is where we're accumulating on those orders. We had a final push down, a final manipulation here, the lows on this push down. And we have a push out, a nice strong momentum push out. That leaves this area of demand. We have a pullback, another strong push up. We have another pullback to manipulate through these lows here. So this low and this push up. We feel this area of imbalance, and then we have a push up. Now, what we've just created, we just move that back. Didn't mean to do that. So what we're looking at now is the market has come back. We're making this lower high. So if you look closely at the actual chart itself, let's get the right tool. We're starting to create a wedge pattern. Now this isn't a pattern that I will look at trading, but it is most definitely a pattern you will find you'll get manipulated out of. And what we can potentially find here on these types of patterns is the market will run one way and then completely reverse on you. Now this manipulation will happen because they know the retail patterns you are trading. Now there is a video that I previously done where I said I actually quit retail trading strategies. Now, I do suggest watching that video as well. I will leave it linked above now as well, so potentially go and watch that. Now we can see we had a close through the outside. We've taken the low of this low here. Now a strong push back up is going to show you that manipulation. The one I was just talking about, the manipulation in the market. So this low just been taken, and we'll have that as a manipulation. That's where you can start to read the markets better. Once you understand, let's move this right across. There is your retail pattern, the wedge, the triangle, what you want to call it. We had a push out, and normally when people see the push out on that retail pattern, they're looking to sell to downside. They're expecting that from this point, you use the wedge itself from high to low, this area, and you project it down. That would be your target. But often what you're going to find is that you're going to push through the triangle, the wedge, and then completely reverse in the opposite direction. Now for us, that is perfect because we're looking for the market to go higher still. But we can also see the manipulation one way, manipulation the other way, and then a drop. This is where they want to bring in sellers, take their stops. Where would you place your stop? Just think of it at the moment. If you are a retail seller, and I talk about retail, I'm not a professional, I'm a retail trader still, but if you're selling here, if you place a sell on this candle, where would you place your stop? Your stop would be above this high or above this high. That's where they need to run the market now to take those highs, to take any stop before we can sell the market back off. So we'll have to wait and see what happens. That's why we run this low, to pick up any orders, take those stops. Anybody who's bought here, anybody who's bought on this here on the triangle, there'll be stops in below these lows. So at the moment we could run down these lows again. We could see a push up eventually. So when you're trading, you need to understand all the concepts. You need to understand your trend analysis, your multiple time frames, your breaker structure, understanding your supply and demand, understanding your manipulations, your smart money concepts, your imbalances, understanding your trading range. You need to know a lot of trading education. That's where hopefully I come in to help you with this YouTube channel, give you that education absolutely for free. I really want to help as many of you as I can. This is what I created this channel for. Now look, we're now continuing to go down. I really would have rather seen a push up. Oh, there's your push up. I would have rather seen that straight away, but that is your final push down. I don't think we took the lows again, but there's your manipulation. And look how quickly that actually went up. Okay, so we took the lows, just about took the lows again. What's the low of that candle? 9901. No, we did actually. We just took the low once again on that bearish candle, and immediately we see the push back up. So I'm talking about that manipulation phase. Trying to bring in sellers again here, and then we push up, we take the high of that candle. Look at this, we have a high here, been taken, and this high has been taken. And we just filled this imbalance. So we could still see a manipulation here now, and we push back down. So this video is now 52 minutes long. I think I'm going to look at closing this video down around 1 hour. Just have to see what happens. Hopefully we get another push up so we can see that price gets to this level at least. So you can see, look what happened here. Let's go in closer. Going to move that there so I can't go in closer. So we can see the market here pushed up. We left this area of imbalance. We pulled back. We never closed it. So we spiked down, took the low, and now we continue to go back up. We want to see a nice push up to take the highs. We just take this right across. Leave this side for the moment so we don't keep catching it. Just remember, this isn't a live trade. It's just showing you in live market conditions where I'd be looking to take a trade if I was trading this right now. So at this point, if we're in this trade here, a good place now to place your stop loss would be below this low. So now we've created this manipulation. if we're to take this low now, continue to go down, we're likely to take this area of demand. So a good placement now would be to protect your account is to perhaps bring your stop from this area where we had at this low, and to think about bringing your stop loss. Let's bring this back across and bring that over. Grab that, let's zoom in. Okay, so your best place now to think about your stop loss is to bring that up below that manipulation. Because if price here is going to continue lower, then we're most likely to take the low. Now this is using good risk money management. As you can see, price now has closed and removed this area of imbalance. That indicates potential price to go lower. And it also indicates to me that this low will likely be removed. And we're going to continue to this area of imbalance. We can always get back in a trade. So now we've moved our stop up. Let's say we were in this trade, we took some profits here. Our aim was still to go up to these previous highs, or at least these highs here. But we've moved our stop now to protect your account. That's when it comes into good risk money management. So if we now see a close down, removing this low and closing this low, we're going to see continuation to remove this area. And this was basically just a retracement from this leg down, pull back, perhaps to continue. But I would still prefer to see a manipulation up here to then sell. It's now 55 minutes long, so we've just been stopped out if we were in that trade. Remember, we already took profits off that trade, so there would have been no loss. And it's a strong push down. We're removing this area of imbalance and we pull back into this imbalance. Now, if we close this imbalance, then we're definitely going to take those lows. So we closed at it. So I think that's a little low. Can we close on it? So let's have a look. So the open price is 98963 and the close 98962. So actually we did close remove that zone. So that now shows me that we're going to remove this area of demand potentially and continue to go lower to remove this demand. That shows me the continuation now to downside and a potential trend reversal. Though we can still look to trade these areas to downside. There was no trade here for me to take, not what I would prefer to take. We still had a break of structure here to downside, just here. And now we have a large break of structure. Another break here as well. And we're removing this low. Now we reverse the trend. So what happens when we see this? Well, our new trend, our new range, will go to the next low. So our next low is our low. So we can see where the market is now coming to. And this is where we'll be looking at price to pull back into this area. Now at this point, we're below this low. We're not looking for any more sells. Okay, we're not looking for buys at the moment. We're looking for sells. Now we're looking for, we just took the low of this move. Look at that, how we just wicked the low and we had that big move. Look at the big candles to the downside. We broke structure. We leave behind our areas, oh, wrong tool. Leaving behind our area of imbalance here. Imbalance left behind here as well. And we have an area of supply left here. So now we can see how the market went from this drop down into the demand zone, push up, where we could have got some buys, and we read it to this area until we broke through where we knew to move our stop before we got stopped out. Now we had a break of structure here, minor break, a large break, and now we're on for bearish price action. So now we'll be looking for a pullback for a sell. Now this is our outer range. We've just tagged it. So if we were to pull back here, we're looking to target this low to start with. If we break that low, we close this low. Where's our next low? Here. But before that, we're going to have areas of imbalance left over still. You can see that we have an area of imbalance here. It's not been filled yet. Okay, so that price could yet go down to that level. But first, we're expecting price to perhaps show us a pullback. Now, all this went to 15 quickly. What's happening on a 15 minute? Now, let's go to a 5. It's a 5 minute. That's better. We can see this is our swing pattern on a 5 minute. So we've actually gone from this bullish, 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 bullish. We have a pullback, a lower high. We broke through, say, this low, break of structure, and we broke this low here, which shows me a break of trend. So we've gone bearish, bearish, move down. So now potentially we can look for that pullback for another sell back to these lows, to this area of imbalance. You can see we've got an area of imbalance left over here on the 5 minute. That comes in line with this 1 minute here, where potentially the price will go to. But right now we're looking for that pullback. You'll be looking for an entry off this area of supply and this area of imbalance. This one has now been filled. I'm expecting that one to be removed. What I've been looking for now is a pullback into these areas for a sell. Now it may not pull back to there. Now why? We're looking at now is our trading range. This is our small trading range from this high to low. We want to see price come back above this 50% area. This is our discounted area. This is our premium area. We want to see price pull back into this area for a sell. That's what we're looking for next. Now we could just look at taking a simple set and forget entry here. Stop above the high, plus a few pips. That would be my first target. Second target is area of imbalance to be filled. Down here. I know these are not large risk to rewards, but when you start using higher time frames, going down through the smaller time frames, that is how you can start to increase your risk to reward. Imagine this being a 4-hour time frame, and then you're taking an entry inside here on a reversal back down to these targets. You'll be then looking at something like probably a 14, 10 to 1. That's how you increase your risk to reward. So right now, look, price is now going into area of imbalance. We'd like to see price just pop up into this area of, area here, okay, of supply. So push up into the supply, will bring us into this trade, and we're looking for the market to drop back down. Now we could see the market push up to fill this imbalance perhaps, or even at least go to this 50% area. That is a great area right there to take a trade. At that level, we just change the color. Okay, so this will be a great level to look to take your entry on this trade. Price has not quite gone into the area of supply. We have gone into this area of imbalance. The 50% level is a great area, but if we see price continue down, then we miss the trade. You have to decide where you want your entry. But for me, I want to be in that supply zone or the area of imbalance if there's no supply. Now, a 50% area here of this imbalance is a great entry. So this would be your ideal entry of the imbalance inside the area of supply. Pushing up now into the supply zone. And we want to see a push into the area. It's now gone into the area of imbalance to 50%. So you'll be in the trade here now. And be looking for continuation down. So we want to see a reaction here. We want to see a bearish reaction to fall. So this is just basically using this trading range. So we've used this as our trading range. So we had a swing, swing down, and a pullback into an area of supply. We've used that level as our entry, was the 50% of this area of imbalance. Let's just remove that imbalance for now. We want to see a reaction now. If we continue up and we get stopped out, then so be it. It's a loss. But we read the market the same way every time. So this is our entry of the 50% of that imbalance. There's our low, there's our high of the imbalance. We've filled that full imbalance. Now if we close it, we're going to take the high and we'll be stopped out. So it looks like we're going to be stopped out. So it's not a great example in this video, really. There's a couple of losing trades. The first trade was only a small loss, but let's just see what happens. We could still see a close back down, but if it closes above, we're going to take those highs. Just wait and see on this candle. And then we've been on this video now, hour and 13 minutes. It's giving you an insight how to read the charts. So we have closed above. So I'm expecting the price to take those highs. Let's see what happens. We're not stopped out yet, but if we close continuation, looks like we'll take those highs. As you can see, price went up. Okay, we left this small imbalance, continued to close higher. We filled that imbalance, and then we closed up. We pulled back to fill this area of imbalance, and now we're holding here. Now if price can close back down, okay, we may continue to fall because we're inside supply still. But if we close this area here, we could take the high, and as you can see, price is now continuing up. What do we have sitting right above that high? You have an area of imbalance. Now the best place here really for your stop, in fact, really should have been above this imbalance, because that's where price may want to go up to fill and then drop away, taking this high. So this area of imbalance, okay, may want to be filled and take the high of this high before we see that push down. So you can see I actually made a mistake there. I didn't notice this area of imbalance left over. So we're pushing up. Just remove this area of supply for a moment. Now normally what I'll be doing, I'll be looking at actually placing your stop above the high of that candle which created that imbalance. That's where you really want your stop. And your entry would have been above this high here. Now obviously at the point we were going for the 50% of this area. So I will leave it there because we were looking at taking that trade, 50% of that imbalance. But this, in fact, would have been a great entry as well. Now, you're not going to know ahead of time whether this area is going to hold or not until price closes through. Once we close through, okay, then we know it's going to be a loss. So we had one trade here potentially, and then the other trade could have been at this area. So what we're looking for now is a manipulation of this high into this imbalance for the sell. If price doesn't hold, what has happened is we had this area here as our range. Now if we take the high, that goes to this high. So you have this as a low to high. Okay, so that is now in your range. And you can also take it from this high as well if you wish. So that is your full range downside. So anything closing above this high into this imbalance is still a potential sell, because this is the last area of imbalance left over. So we could see a dropout from here. Like I said, an ideal entry would have been at this high. So using this strategy of this, you would have your entry, okay, your stop, sorry, above the high of this candle, your entry at this previous high. That's where you want your entry. So you want your entry at this area here. And your first target would be these lows. But what we've actually done here, we've actually gone for the 50% of this imbalance. So we want to see price take this high, fill this imbalance, and then drop down. If this doesn't happen, we're going to continue higher. We're still bearish, break a structure, break a structure. There's your last lower high. There's your low. There's a pullback. So from this high to this low is that range. We were just basically looking at this high to the low because the move up broke the low as our range, but your full range is going to be from this swing high to low because that is your lower high in the market to the low. And that would be your trading range. And within that range, you can see price filled, close through this imbalance, close through this imbalance. Now we could see price go and take the high into this imbalance. So the high here is, let's have a look, 99026. The high here is 99025. What's that candle? 99025. So we haven't actually yet took the high and gone in, and prices have started to roll off. So if you was taking an entry above this high, you may not have actually been triggered in. Obviously, we took the entry here, the 50% of this imbalance level. Now, our stop was just here above this high. Now, you wouldn't have been stopped out, but again, this would have been a better area to place your stop. I missed this area of imbalance to show you that. Okay, so as we can see, that final target has just now been hit on this trade. So whether we taken that trade off this imbalance, the 50%, when we had our stop here or had our stop at this high, the trade would have worked out. And we see you had some balances on the way down being retested as we continue to fall. So I hope this video has been really insightful for you today and it's giving you some good education. So popping up right now is that video I suggested you to watch the end of this video. And that goes through understanding that premium and discount areas when taking the trade. Now we did briefly go through that in this video, but that'll go through it in much more depth.